is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's making a great night, folks. Love coming out of you makes you happy. The whole world can love you, but that's not the love that'll make you happy. What will make you happy is to share all the love you have inside of you. That is the love that'll make the difference. Market-wise, let's take a look at it out here. We have the Dow Industrials up 24, NASDAQ down 6, S&P's up 1. We're going to start right there, folks, because we have had a heck of a day. Let's go take a look at the Dow Industrials first. So what do you have? Dow Industrials today had a low out here of 23,531. Check it out. We're at 23,950. That is one monster number, folks, from highs to lows. Now, that being said, what you have happening here is this. Your high volume low, which we haven't hit yet, is 23,360. So that's like about 170 points under the low that we had today. Your last low that was established out here was on the 2nd of April. That was 23,344. Bottom line, it's, we got down basically within 100 points of that. That being said, what you have out here, and I expect the way that this is going to shake out coming into the close, is that we're going to have markets just slightly negative. And what that was going to do is that you're going to have basically these little dojis, or large dojis actually, at lows with too much volume that broke the swing points from April, and what that sets up still lower prices. That being said, what I do expect we're going to see coming in tomorrow is also basically a sideways market. This is the cause building for lower price. That's how this thing is shaking out. Let's go into the S&Ps right now and look at the S&Ps so we can get a kind of an inclination of where we are, where we've been, and where we may be coming into this close. So S&Ps, heck of a day. We start out the day, 5 o'clock this morning? You're at 2636. 10 points higher than we are now. We go down to 2591, laid out a low out here at 11 o'clock this morning, 1050 to be exact. Goes topside again. When we went topside, that's a classic going up to ice. Bottom line is that you had some good volume on the break topside at 230. So this is going to get really interesting because what you do have is this. So picture intraday right now. We got, yeah, that's a decent bar at 2634. So we're 2625. You know, we'll see where this shakes out. But that normally that's a decent indication that that thing wants to get at least tested. So we'll see where that. Now that's on a short-term basis. And when I mean short-term, I'm talking about in the next 45 minutes. If we close right where we're closing right now, that baby is flat out saying, guess what? You're still building cause to get into this low of February 9th. The February 9th low, folks, they're sticking out all over the place. Gold contract. What do we have with gold? Okay, so gold, well, actually, let's do the small caps first. So the small caps, the IWM, small caps have done 16 million shares. You broke a swing, well, you're going into 2 days ago, we had 24 million. So what you're going to see inside the small caps is that you're going to get some kind of rejection of price. That's what it looks like. So the small caps look like they're going to pop again, which would basically say that tomorrow, sideways market. We get jobs numbers. We'll see what the market thinks about that. Thus far, no matter what kind of numbers companies are coming out with, they're selling them off. Gold contract. What do we have with gold? Gold contract, not bad, not great. We're at 13.14. You know, yesterday, we'll see how this shakes out coming into the close. It sold it off coming into the close yesterday. We're right at the number that you want to keep your eye on. Why? Because this is the higher trading range. With 13, 14, 30, I'd really like to see this thing close up somewhere around 13, 16, 13, 17. The higher, the more above 13, 15, the more bullish that would actually be, particularly coming into a Friday. Silver saying it wants higher price. Oil, let's go take a look at the oil market. Pretty wild here. Oil just refuses to give it up. In fact, I think oil looks to me like it wants to go to 75 bucks, which we're going to be paying some money for oil here. You're at $68.43. You continue to push highs with volume. I mean, they're buying some oil up here, folks. You know, this has been consistent since oil broke topside on the 18th of April. So bottom line is that, you know, when we take a look at this, we had come down so fast in 2014, it's not going to be hard to get to the 72 to 75 level. Notes and bonds, they continue higher. That is also about as deviant as you can get, because we had the Federal Reserve stay flat yesterday. Bottom line, it's 100% inside the Fed Fund futures rate that they're going to go up on the next meeting. And the next meeting is going to be on June 13th. And right now, that baby is laying out at 100% short-term bank-to-bank rate, 25 basis points. The 10 and the 30, they're going topside. They do have volume behind the move. We get over and we take a look at King Dollar. What you have with King Dollar is this. King Dollar traded to a price point today of 92,600. You back down, and now this is where this gets pretty wild. So we're down 104 ticks. You've done 22,000 contracts, but guess what? And here's some divergence. You are actually backing down with light volume, because yesterday we went topside with 38,000. You're backing down with 22. What's sticking out here like a sore thumb is 93,480, which is the swing high of December 12th. You know, so it doesn't look to me just yet that this dollar index is done going down. I suspect it wants to go up there and spike it. What I mean by spiking it is specifically spiking it. That it wouldn't take much to get up there, whack it when the jobs number comes out in the morning, and give it up. You know, so we'll see how that whole baby is going to shake out. Some of the higher volume stocks in this market out here, you have Bank of America down 40 cents. NXP Semiconductor, that's getting smoked. That's down 10% or $9.40. You have, let's see, we got AIG down 330. Let's see where Tesla is. Tesla has been getting hammered all day long. Let's see if we get any juice on the way back. Tesla's down $17, $2.84. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. We have the Dow Industrials up 21. Nasdaq's down 7. S&P's are flat. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials up 19, Nasdaq down 8, S&P's flat. Let's go over to our man, Mr. Andy Heck, as we do each and every Tuesday and Thursday. Don't forget, folks, Andy's got a great show right here at TFNN, 5 to 6 Eastern Standard Time every Tuesday and Thursday. Get it right at TFNN.com. You can also, a really easy way, folks, to get all the shows, go to YouTube. Inside the search bar, put TFNN. Bring it up right on your phone, hit subscribe. All the shows will be there each and every day. Whenever you want to listen, bang, it's right on your phone. Awesome way of basically bringing TFNN with you. And of course, you know, once it's Hotel California, once you're in, you're not going to get out. It's a beautiful thing. Hey, Andy's also got 2 great newsletters. He has his Technomental Commodity Report. That is his weekly newsletter. He's got the Daily Essentials. That's his daily newsletter. You can get both of those, 30-day money back guarantee. Just go to TFNN, go to newsletters. Both of them are laying right there. Andy Heck, I heard you're going to come in and you're going to buy lots of gold for me this afternoon, so we'll get it over that 13-16 level.
It's already settled. It's already settled, unfortunately. I mean, it doesn't look bad here.
No, it doesn't. I just like to see it a little higher. Do you know what I mean? So.
It doesn't look bad here. The bottom line here is big reports tomorrow. It's following the dollar. I think the dollar's running out of upside gas, and I think that's going to be your biggest friend.
Yeah, you know what? I'm elated that the dollar has had, you know, a nice little run here, and we haven't got destroyed in the gold market.
Exactly.
Yeah.
Exactly.
Right.
Dollar broke up, and gold, hey, it put in a new low on the year, but very marginally. So doesn't look terrible here to me.
Yeah, and silver, well, silver
looks better.
Silver caught a bid. That's good, right?
Silver looks better.
Yep.
And platinum back over 900. That's still a dog. You know, interesting today. The natural gas numbers were bigger than the market expected.
Right.
So it's pushed natural gas back down. We saw 62 BCF injection. The low for the year, 1.281 trillion cubic feet. We're now up to 1.343.
Now, was this the first injection of the year?
Yes, it was.
Okay, okay. Yeah.
So, you know, but natural gas traded down to 270. We're at 273. It's going to be interesting. I think this storage is going to fill up very quickly this year.
Okay, so if the storage fills up, that's when price is really going to have a hard time getting higher. Yeah, right.
Well, I don't think they're going to get higher, but I don't know how much lower they're going to go. You know,
okay.
It's going to be. you know, volatility in natural gas is kind of declining. We'll see what happens here. I mean, initially they should go a little bit lower, but anything's possible in this thing. This is a crazy market.
So let's bring this back a bit. Let's say I want to bring this back like 20 years, just for. So I get the continuous contract. We've been here for a while, haven't we? We've been here. So look at this. We've been here since like 2009. Okay. Yeah.
You know, the range of natural gas since they opened this contract in 1990 has been $1.02 to $15.65. So, you know, the bottom line is the fundamentals for the market have changed dramatically. You have huge reserves now that you didn't have back, you know, a decade ago in the Marcellus and Utica shales.
Yeah.
So that kind of caps the upside. But you also have new demand verticals. You got more power generation coming from natural gas than from coal.
Okay.
And you have liquefaction and export of natural gas. You have a limited amount of storage capacity, probably a little over 4 trillion cubic feet each year. And the bottom line is the market's changed, but the market's changed in such a way where the price is muted down.
Well, the case you just built up there is a great bull case, and it hasn't moved, right? Is that what you're saying? Because
it's a bull case, but it's a bear case too, because you got reserves of quadrillions of cubic feet in the Marcellus and Utica shales that weren't there in previous years.
Okay.
So.
Yeah, so you use it, then you put it back in. You use it, you put it back in. It's not like you don't have the stream that you can't turn those knobs, right?
Exactly. You could get this stuff out, and plus the technological advances in fracking have lowered production costs, and less regulation have lowered them even more, and corporate tax reform have lowered them even more, and that's all, you know, making it cheaper to produce gas. And
you know, it's going to be interesting here to see how many people switch to natural gas because we get oil going higher again, right? Because, you know, if you live up in the Northeast, folks, I remember these ads so dramatically in Boston. Now, I'm going back 20 years, but bottom line is that the Boston Gas Company continually saying, hey, here's a steady supply, here's a steady price, you know what I mean? You never know what you're going to pay for heating oil because, of course, heating oil up in Boston, you know, is a big cost, man.
It can go through the roof.
Right.
Sure.
Right.
Sure. Absolutely. They big bills this year. Well, not as big as 2014, but
I bet they're big. No, I mean the weather finally broke, but before this it was a disaster.
Right. The final bill for the final snowstorm hasn't come in yet to many people up there. Yeah. It's coming later this month, right?
Right.
Yeah. So
now it's 90. Now it's 90 degrees in New York.
Right. Exactly. Hey, go figure. Crazy weather. Speaking about crazy weather, a week from today, we're going to get the Wosley report, Tom.
Okay.
So, and grains are going in on a positive note. Look,
now, is this a bigger Wosley report because of the time of the year? Or are they all big?
I'll tell you, it's a bigger one because we're going to get some final numbers out of South America.
Okay.
So that's big, and they aren't looking great. It's projections.
And is that because of the drought in South America?
Yes,
or that
yes, Argentina.
Okay.
And it's it'll be tempered because the USDA always likes to look at these markets with rose-colored glasses on.
Yeah.
They always like to assume the best, the acreage planted, that there's going to be enough rain and that it's going to grow and everything's going to be wonderful. But
why do they do that?
It's just the way they do it. They assume that the weather's going to be good. That's what they do. They don't assume. They put nothing in there for a drought.
I see. Okay.
But they will respond to it if it happens, you know, in the months ahead.
Right.
I'm just talking about this report.
No, I'm with you. I got it. Right. I get what you're saying. Right.
They assume that every seed that goes in the ground becomes a plant.
Right. Okay.
So corn is making new highs. 408.
408 a bushel. Okay.
It's and wheat's up there near the highs. 530, 740.
Yeah.
You know, new highs. Very, very strong markets here. Wheat can be a wild one, you know, because wheat, it's not just the U.S. It's Russia, it's Canada, it's Australia. Any drought in a marginal producer is going to force the price of wheat up.
Man, wheat's strong. Yeah.
Yeah, wheat's strong. But, you know, wheat is strong. But look at 2008 where it went. In a year we have supply problems. $13 a bushel. So it's strong at $5. We'll see what happens. You know, like I've been saying for a long time, the downside is very limited in a lot of these grains because of demographics. population and wealth growth, more people, more money, compete for finite food.
Sure.
But the upside is potentially explosive. Explosive.
Yeah, I guess I just put wheat back, 25 years too. No, I can see that.
By the way, put it back. Take a look. Higher lows. The demographic trend is right there. For the last 2 decades, at least since I think it's 2000 or 1999, you have higher lows in this wheat market. What was wheat at the turn of the century, 2000? It was like $2 a bushel.
There it is right there. Yeah, 222.
Yeah.
Yeah. Yeah,
More
no, this
people
is the one you were just talking about. What? In 2008, was that a drought in 2008? Is that what happened?
Yeah. Caused the Arab Spring. We could talk about that after the
Look
break.
at that. Stay right there, folks. Andy and I are coming right back. 877-927-6648. Give us a call, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Heck. We are talking markets. We're talking commodities. And, of course, don't forget, Andy's got a great show right here, 5 to 6 every Tuesday, Thursday. 2 great newsletters, Technomental Commodity Report. That's his weekly. His Daily Essentials. Just come over to our website at TFNN. You can get both of them. 30-day money-back guarantee. Right now, we're looking at this wheat market. So
you remember Marie Antoinette during the French Revolution said that someone told her, this is the way the story goes. Someone said that the peasants had no bread, and she said, let them eat cake.
Okay.
That caused, she lost her head because the peasants had no bread.
Wow.
And so what we saw here in 2008 is the latest example. We saw wheat prices. We saw a drought.
Yeah.
We saw wheat prices go to over $13. We saw a lack of supplies of wheat. And then shortly after that, in 2010, because of soaring wheat prices, you had an outbreak of riots in Tunisia and in Egypt, which led to the Arab Spring and the deposed leaders there, Mubarak and others, and the Arab Spring that began. And you know what? It began because of wheat. If you can't feed your people, then governments lose power. And the bottom line is that bread is a staple.
Oh, yeah.
Bread comes from flour. Flour comes from wheat.
Yeah, wow.
So, you know.
They can fill you up. Yeah, there's no doubt. That's pretty cool, right? Yeah.
Like, but if you ask most people in the street, what's the most political commodity, they'd say, they'd tell you crude oil. But it's really wheat.
That makes sense. No, I'm with you, you know. Yeah. I mean, hey, listen, we're in Florida many times. It's like, okay, if we don't need heat, you know, it can get cold, we need air conditioner, but guess what? You can live without air conditioning. We get plenty of fish down here, so we can eat too. So it's pretty cool, actually. But
Right. Anyway, so that's what's going on there. Another interesting thing I want to point out, we had a repeat of a pattern that's been going on for a long time, and people should sensitize themselves to that. Yesterday, you know, the dollar has been rallying.
Yep.
Gold and silver tend to go down going into these Fed meetings.
Right.
And we had the same thing yesterday. Look, it's not a dramatic reversal, but we did have a reversal.
Yeah,
it's
no,
down
I know.
before the meeting.
You had brought this up Tuesday when I had you on Tuesday. Yeah.
Right. You know, and we got an interest rate hike coming in June.
Right.
And the bottom line there is, hey, this thing is priced in the market 36 ways till Sunday. You know, I mean, you know, everyone knows rates are going up. The only way that the Fed could shock the market is to pull a 50 basis point hike, which they're not going to do.
No, they're not.
Not with GDP rising. You know, not with.
I mean, listen, inside their statement yesterday, that whole deal about, you know, letting inflation go over 2%, they stated it, you know, a couple different ways.
This seemed very dovish to me yesterday.
Yeah.
You know, this is supposed to be a new Fed, new complexion, new hawkish Fed. The bottom line was the hawkish tone was missing from that missive yesterday. So, you know, I think that gold is going to go. No, I'm sorry, gold is going to go higher here. I think we're going to see gold a lot higher here. I think it's just waiting.
Well, it's kind of interesting what you're saying, too, because I was thinking about this is the shot. We have the shot from like now to July or August, right, basically, to get some action going. Yeah.
Right. Listen, the commodity markets are in good shape. Did copper come down? Yeah, it came down, but it's still 309. Oil's not giving up anything.
Oil wants, man. This oil market, we're gonna be paying some money for oil, right? You can see it.
I could see $3 gasoline this summer.
Yeah. Well, I guess let's go over there because so it was interesting inside the gasoline market. Now this chart is different. XB than the oil chart because of the way this traded in 2014. You know, what had happened is that gas got a little pop where the oil market didn't. It was a one-way trade. You know what I mean? Like what happened with gas is that, you know, what happened, folks, is that we went, you know, 2014, that's when oil got crushed. Gas went from $3.15 wholesale in June down to January at $1.22. But then it popped where oil didn't to $3.18. So this $3.18 will give it a little, you know, resistance. But you break that, man, I'm with $3.10 or something.
Yes. Yeah. Let's point something very important out about oil here and why it is so strong and why it's going to remain strong. I have up here a chart of the RBOB gasoline crack spread.
Okay.
And the heating oil crack spread looks just like it.
Yeah.
So right now we're trading at $19.30, roughly, a barrel. All right?
Yeah.
Last year, at this time, the high in this crack spread was $17.20. That was the high.
Okay.
So we're higher than the high.
Yep.
Also, the price of oil is more than $18 per barrel higher. So usually when oil goes higher, you know, the crack spreads go lower because, you know, demand it goes down because the prices are high.
Yeah.
Just the opposite is happening here. So the bottom line is that the gasoline is really strong this year. And if you think gasoline's strong, look at the distillates. Tom, that crack spread Let's just get that crack spread up here on the weekly chart. There it is at $20.40. You know where that spread was last year at this time? Unbelievable. The high this week, $14.40.
Wow.
So
that's almost, well, yeah, it's 40% higher.
Yes,
yeah.
These are highly supportive for the price of oil. And this is one of the reasons that crude oil is not coming down, Tom. And you know what? The XLE is not going up. That's telling me that's because they're not making new investments in oil production. And the bottom line is, the XLE doesn't have to go up with oil. Maybe it's not a warning sign. You know, this thing is consolidating very nicely here between just below 67 and the high over 69. And next move could take this thing to $75 in a heartbeat. And if we have a problem in the Middle East, forget it. You could see triple-digit crude.
Yeah.
And you know what? Listen, the nuclear non-proliferation, the recertification thing's coming up in the middle of May. So, you know, this oil market is not going down so fast.
Yeah, and I suspect that has a lot to do with it, too.
Yeah.
You know, because it doesn't look like that thing's going to get signed verified again, right? It's a verification, I believe, every 6 months.
Recertification.
Yeah,
and
recertification.
If it steps away from it, then it falls apart.
Right.
You know? So the bottom line here is oil is where it's at, you know, and by the way, oil should have come down a couple of bucks with the dollar zooming from where it did.
Yeah, no, I can see that.
Did not go down a bit. Listen, copper went down, gold went down, silver went down, lots of commodities. Oil just sat there like a rock. It's telling you how strong it is.
Pretty amazing, man. It really is. You know, when you think about how low we were, I mean, I know it's, you know, 4 years ago, but bottom line, we were at $27. It's like, oh, and
$26.05, baby.
Yeah.
That was the low, right?
Yeah.
And we were last June, we made a low at $42.05.
Yeah.
I mean, we're 65% higher.
Yep. No,
These are big numbers.
Huge.
Big numbers.
Huge.
But when you look at the longer-term chart, Tom, we broke down in 2014. The next level of technical resistance in this crude oil is at 107.73.
I know. No, I can see that. Right.
Hey, yeah, you got better than $35 upside here if something crazy happens. Everything's pointing higher to me.
Yeah, no, I can see that. And the intriguing part, you know, what does happen, folks, is that it's amazing oil went this high, stayed this high, with the dollar getting a good little bounce behind it, because oil's priced in dollars. That's the bottom line. So
exactly.
Okay, right here, folks, 5 to 6 Eastern Standard Time tonight, hour and 20 minutes, and he's going to be up there growling and prowling with you. Thanks so much, man. Oh, listen, I was watching your nights last night. Better luck next time, man.
Oh, we need to win Friday.
Yeah,
it's ugly.
You guys will win Friday. You guys will win.
We'll see.
Okay, man. Have a great one. Stay right there, folks.
Thanks,
we'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Right now, Dow's down 23, Nasdaq's off 12, S&Ps are off 2.5. Let's go over and we'll take a look at the semiconductors, because what you've had out here, NXP got absolutely toasted and roasted. Let's see where we are here. So this baby's down about 10%. Huge ABC down, broke the B point, broke it with volume. So let's see what we got here. So you get 117 ballpark, and you say a 17.8 to B, which gets you, well, it already did it, $90. Let's see what else is down here. And then we're going to see what they had to say, which destroyed this stock. So this stock's off a high, look at that, off a high of 125. That's a high volume high. Man, that's interesting. Okay, so 81 is game here. 81 is where it broke out from in September of 2016. Oh yeah, this is danger. Yeah, oh, I see. On a monthly, this is high. This is volume off a high. So let's see what they had to say. What took this baby apart? So the revenue estimate was $2.34 billion. They took in $2.27 billion. Wow, I can see this. Holy cow. We'll find out what was in here. So the earnings estimate, folks, was $1.67, and they made 17 cents. That doesn't even, that's so far out. Most times, if you have something like that, meaning that if the miss is going to be that extraordinary, that is a material fact. And most times, you actually see them warn before they come out and just blindside the market with a number like that. That is one intense number. Let's see. So, okay, I see. So this might have something to do with the China-U.S. trade dispute. NXP Semiconductors plunged 12%, lowest in a year. The drop was triggered by disappointed earnings. Yeah, they blew the earnings. The company, okay, so the company is in the midst of a $40 billion takeover by chip maker Qualcomm. The deal appears to be on shaky ground after Chinese regulators required additional concessions in April for approval. So Qualcomm, let's see what Qualcomm's doing. Yeah, Qualcomm hasn't done anything. Qualcomm has a high of 68. You're at $50 right now. Pull this back. Pull it back a little too far. Pull it back 15 years. So $52. Well, you know, Qualcomm looks like it still wants to hit basically 42, but you're coming into these levels, and you do have volume dying on the vine right now. So this is what's intriguing is that Qualcomm is back at 2005 levels. take a look at a few of these numbers here. It's pretty amazing when 2018 you're back at 2005 numbers. Yeah, I see. So this Qualcomm, for the last 4 years, their revenue has decreased 26 billion to 22 billion. They plan on increasing their net sales, their revenue next year, 22.1. They're looking to do 23.4 next year. So we'll see if, in fact, they can get any of that juice going. Let's go into the financials. So we know the Fed had the meeting. Oh, look at this. Unbelievable. This is so cool, man. Okay. So never ends, folks. If you don't have the art of time in the trade, folks, you want to understand swing points, volume, expansion, contraction, all the above, just check it out right on Amazon. So, JP Morgan, what do? The high volume lows, 103.86. We hit today 105, but this is what we've also done. JP Morgan is down on volume. This is the amazing part here, is that the way that these financials are shaken out is telling me that these rates are not going to go up. Let me pull up the next one. Let's see. Well, here, we'll pull up the XLF. They can't get out of the way. Look at this, the XLF. So the XLF went after the high volume low today, $26.76. We hit $26.46. So you're right in it. So there's something inside. Thank you, Z. Berkshire, BRK. Berkshire must be getting whacked, right? This is amazing, because that is one number. Berkshire down $2. That's 189.30. We hit 189.80 thus far. This thing's going to blow this apart, man. So let's see, who else? Bank of America, BAC. Yep, BAC. Oh, look at this, BAC. Okay, so now here's a real heads up too. Bank of America looks like it's going to close underneath it. So the high volume low is 29.15. You're at 29.13. You have monster vol. In fact, hold it. This is an ABC down. Yeah, you got a confirmed ABC down. This is pretty cool. Okay, your A point on this is 33. Your B point is 28. We get $5. Your C is 31, so you get 26. You're at 29. 26 is where it broke out from in November of 2017. This is trouble in paradise, big time. And we know the thing that's amazing, you know, about markets in general is that all these numbers that the banks come out with, great numbers, bottom line, sell them off. Not only sell them off, sell each one of them off. And, you know, if you're fundamentalist, the bottom line is that here, watch this. Even the spread yesterday in between the 2 and 10, folks, did widen out. So right now we're 2.944 versus 2.4. Yeah, it's like 50-something basis points. That's not bad. That spread, that widened out a bit. And even with this, so the basis of the spread, if you owned a bank, the bottom line is that you're basically paying a small number, you're getting the loans on a larger number, and then on top of that, though, you're leveraging that up to basically 10 times. So what happens is this, is that let's say you get $100, you're paying interest on $100 here that you actually have. You're spending, you're loaning it out at the higher rate, and then you can do that 9 more times without even having the money, because that's what fractional banking is. That's the banking system that we have. That's amazing, okay? Bottom line, that is not even helping the banks. So this banking sector is going lower. Banking sector is going lower. Your probability gets pretty good that the market itself is not going to be gangbusters topside in the aspect of rates. So let's see. I guess if I look at Adidas, I'm going to look at Adidas in Germany. So this is down $14. Yeah, this came down with volume. This is a monster. Stay right there, folks. Coming right back. Our phone number is 877-927-6648. We have the Dow Industrials right now trading down 15, Nasdaq's off 13, S&Ps are off 1.5. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And if we go over to, I got to show you this because this always blows my mind. But you see this happen a lot. But this particular company, I know this company because when I was first doing the gold report, they were right next to me many times in the booths. I'm going back to 2000 right now. It's called Platinum Metals Group, and they're coming out. They're going to do a. You can see it says they're halted because they're going to do another a public offering of units. What I want you to wrap your head around, if you're in this business, folks, okay, make sure that if you're buying an exploration stock, do some work on them, because the bottom line is that this company here is blowing my mind that they can keep pushing stock out. If I bring this back, I'm going to bring this all the way back to 30 years. What you're going to see is that, well, it only goes back to 2002, I guess. So 2002, it's trading at $2. And the company, to me, was always shaky anyway, a kind of just shaky period. But the mind blower is that the stock went from $2, you get the pump going all the way up to $50, okay, in 2007. Bottom line, now you're at 20 cents. And guess what? They're going to be able to pump it up again. It just blows my mind. With broker-dealers, they're going to sell it. And if you go look at the amazing thing about this one right here is that BMO is actually selling it. And that's, you know, BMO, bottom line, is a very large bank in Canada. And guess what? Still no money. Still no shares, no revenue whatsoever. And when you actually look at what they're doing, this money is going to be basically paying off. It doesn't say how much of it's going to be paying off, but these units. It's not like they're going to be using this to turn around and basically do more exploration. The company intends to use the net proceeds of the offering for debt repayment towards a loan facility and production payment, termination fees due to Liberty Metals and Mining Holdings for general corporate purposes and working purposes. Bottom line, folks, is that when you take a look at this, what you're going to see is that you're going to see they just keep pushing stock out in order to basically get paid. Stay right there, folks. Coming back with lots of numbers after the close.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Get our man, Tim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Let's make it a great month. It's May. Imagine that. Create new agreements based on respect and love. Take the responsibility to make new agreements with those you love. If an agreement doesn't work, change it. Create a new one. Use your imagination to explore all the possibilities. Market-wise, let's take a look at it out here. We had the Dow Industrials up 5, NASDAQ down 12, S&P's up 2. Gold contract trading up 660 at $13.12.20 an ounce. Silver up 7 cents, $16.32 an ounce. Light sweet crude up 52 cents, $68.45 a barrel. Notes and bonds. You get the 10-year note up 5 ticks, 119.22. 30-year bond up 8, 143.16. King dollar down 54 ticks, 92.285. The euro is trading at 119.88 to 1 US dollar. The yen is at 109.20 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so high volatility out here today. Bottom line, S&Ps, They break the swing, break it with volume. The swing we're talking about, last swing low out here, April 25th. The swing low is 260.85. We go to 259.05. You do 123 million versus 103. Bottom line, market saved itself, no doubt, because we get a rejection of the lower price also. That being said, guess what? The way this is set up, this is building cause, folks, to get into this high volume low from February 9th. What has happened is this, and this is how these things go out. If you have a high volume high, guess what? If you only have it in one sector, it's not a big deal. When you have high volume highs, let's say in the whole market, that's where you're going. We have high volume lows in the whole market. I'm going to go through a few sectors for you. You can see a few sectors already hit them. A few sectors have already broke them. Big problems right across all the indices. Inside the SPY, what we're talking about $252.92. That's what we're building cause to get down into. If we take a look at the NDX 100, the 3 Qs, same type of setup. We had an expansion of volume once again today. You got into the price point of $159.22. Bottom line, you're pushing into that last swing low. You got an expansion of volume. We did 58 million versus 52 million. The number to keep your eye on here, and this is where it's making its building cause to get down to, is the 150 area. Right now, 161.80. If we go over to the XLF, well, here, let me do the SMHs first. So the SMHs were the first ones, bottom line, you know, to basically make a barreling right down to the February 9th low. The February 9th low in the SMHs was $93.88. Now, what's amazing about the SMHs is this. So check this out. The SMHs, when we started down in January, were at $108. We get down to $93.88. We broke the swing low that was established in December. And then what do the SMHs do? They explode topside. They take out all their highs. Bottom line, go from 93 up to 114. Then what ends up happening? They fall apart again. They do an ABC structure on the way down. It blows apart as B point on April 19th. Right now, can't get out of its way down at these lows. Thus far, we've hit a price point of 95.47. So bottom line, you're at 96 right now. You had NXPI basically get ripped apart out here today. You know, there's more basically pain that's going to be coming in this market. So if we take a look at NXPI, this has been a one-way trade from $125 3 months ago to $92 right now. It's inside the lower range. It looks like game was on to about $80 in this baby. So that's your SMHs. Now, the financials, the XLF. What do the XLF do? Bottom line today, blows apart. XLF, you're down 23 cents. Doesn't seem like huge, but guess what? You had the expansion of volume, blows out of its range. The XLF high volume swing low, $26.76. We hit $26.46. We did that with 68 million versus 149. So we're down there. That's how this shakes out. We put this on a weekly, and what you're going to see on a weekly is that you're not only down there, how we close out tomorrow is going to be crucial. The reason being is that you can absolutely get a rejection of price at this 26.76. We'll see whether we get it. And in the context of being down there, it's a huge number because of the fact that the Fed has gone up in short-term rates. They say they're going to go up again in June. The market's saying that, and guess what? The banks still can't do anything. If we go over and we take a look at the monster defense stocks, they got absolutely toasted. You know, if we took Northrop Grumman, that came down from a price point in 7 days from 359 to 302. Your high volume swing there is 313. They blew that away. And the difference in the big defense contractors, folks, is that they blew that away with volume. We've already, the high volume low from the week of February 9th in Northrop Grumman is 8.6 million. We already did 8.4 million. So you got one more day to basically blow that away. General Dynamics, same type of setup inside of General Dynamics. This baby has gone from a price point in, let's see, 8 trading days, from 229 to 191. The high volume low is 201, and we're 6 points underneath that high volume low. That's problematic in a huge way. Huge way. On the weeklies, same type of setup. In fact, this one's a real mess. Raytheon. Let's go to Raytheon next. We take a look at Raytheon. Raytheon also making its way down there. High volume low in Raytheon is 191. Thus far, you've hit 196. You're off the high of 229. And now let's go to Boeing. See, Boeing hasn't broken down yet. Bottom line, we got down to 319 today. Now, the high volume low on Boeing was 317. But guess what? Also an expansion of volume. When you're going into these lows and you get an expansion of volume, that is saying that the selling has not finished yet. Stay right there, folks. Going to come back with lots of numbers after the call. Well, right now, next segment. Dow finished up 5, Nasdaq down 12, S&P's up 4.5. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go take a look at a few numbers out here. So Pandora closed at $5.75. This is trading right now at 616. Let's see what I'm just curious of what this actually went public for, too. So let's see. There we go. So this went public in June of 2014 at $16. And you're trading 5.7. Well, you're trading $6 right now. Revenue. Look at all that money too. You know, it's absolutely blows my mind that you can take in huge gross revenues, but if you're not making money, man, you just keep bleeding money. It's pretty amazing. And I guess they keep spending, and they're hoping at some point they're going to get profitable. This company takes in $319 million every 90 days. They plan on taking $1.5 billion in this year. $1.1 billion of that is from advertising. $315 million of that is subscription-based businesses. So let's see what they have to say out here. They lost. Oh, first off, their revenue is $304 million. No, the estimate was 304. They made 319, so they made more money there. The estimate loss was 38 cents. They lost 27. So bottom line, in both cases, they did better. Now watch. I want to show you this though. This is intriguing because I was looking at this yesterday when we brought up Spotify. So when we take a look at this, let's look at this again. So the advertising revenue versus the subscription. Come on, give me that again. Okay, so advertising out of the year, 1.1 billion out of 1.5 was advertising, and the subscription-based revenue was 315 million. Now, wait to see this one. This gets. So if we go to Spotify, they came out with numbers yesterday. They got killed yesterday. They're getting killed this morning. This stock. Oh, actually, that's right. It was after the close last night. So this yesterday was trading at 171. You're at 160. But watch the number, the difference here. For some reason, they're getting people to pay Spotify. So their revenue number for the year last year was 4.1 billion. Well, they took in, by people paying for their music, 3.7 billion. Different program altogether. Then you have ad-supported at 416 million. It just flipped around the other way. So it's going to be intriguing watching Spotify, as to what it can do with advertising in the future. That's how it seems to be shaken out. Okay, so next, let's go Shake Shack, S-H-A-K. Let's see what good old Shake Shack is doing. This closed at $47.41. The low for the year is 30. The high is 48, so it's near the highs. Trading right now at $50.65. So bring this back. Oh, my God. That's just amazing. So this stock, 2015, was $96. Let's see what they have to say, and we'll see what it went public for, too. So same-store sales up 1.7%. That's a good number. The estimate was minus 4%. Earnings, big number. Estimate was 8 cents. They made 15. Good number there. Let's see if I get the revenue. Oh, did I get the? Yeah, that's bottom line. Those are decent numbers. Now let's see. So this is so now, and this particular equity, you made money. They went public at $21. So they're at $50 right now. Not bad. CBS. Let's go take a look at CBS. CBS closed today at $48.74. That's a 52-week low. This is trading right now at $50, up $1.50. That's not going to mean much because this is a mess. Let's see what they have to say. The estimate was revenue estimate was $3.67 billion. They made $3.76 billion. So they did it there. Earnings per share. The estimate was $1.19. They made $1.34. They did it in both cases. HLF. Let's go take a look at Herbalife. Herbalife closed at 106. The low for the year is 60. The high is 107. Bottom line, you're at highs out here. This is trading 104.11. Numbers go like this. Estimate was $1.11. They made $1.40. Revenue, $1.12 billion. They made $1.20 billion. So they made it on both sides. Let's bring this back. and this is where the bloodbath was taking place for a long period of time. Thank God that the guy did close the shot, because, you know, when we bring this back, 2012 was at $73, gets down to $24, 2012, goes back up to 83. But when this thing took off in February, this thing's a lot higher than it was then, that's for sure. OLED, this is, let's see. Okay, so this is Universal Display Corporation. They're developing, so flat panel display infrastructure. That's what this is all about. The low for the year, right next to it actually, $86. The high is $209. This is trading $86, so it's down $4. So it's going to go after the lows. This has been a mess. Maybe, oh, this is a real mess. Look at this thing. Okay, so this in 4 months, it's gone from $209 down to $86. Let's see what they have to say. The estimate was 13 cents. They made 13. Revenue, $51 billion. They took in 43. Yeah, so there's the number. Revenue is going down dramatically. And you can see what the markets do to companies, folks, that they're claiming that they still made 13 cents. That was the estimate. The market does not believe that when they see the gross revenue go from $51 million to $43 million. It's like, oh, really? You know, you just took in $7 million less and you made the same amount? I don't think so. Something has basically got pushed around inside of the books. That's how that that's how that shakes out. Let's go take a look at CYBR. This is software equity in Israel. CYBR. The low for the year is 39. The high is 56. Closed at 55. This is trading 52. Let's see what this does. The let's see. Company offers organizational privilege accounts from cyber attacks. This is a new IPO, yeah. So this $76 was the high. Right now you're out there at 55. I think this is Weight Watchers, right? WTW? Yeah, so Weight Watchers, that closed at $69.70. The low for the year is 21, the high 77. This is trading 75. This is always a big personality stock, no doubt about it. That's making its way back to the highs. Pretty intense. The stock in 2015 was $3. Oh my God. This stock in 2015, folks, was $3.67. Right now, you're trading out at a price point of 75. Stay right there, folks. Come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So we're going over Weight Watchers here, man. This is quite a run. So Weight Watchers right now it closed at $69.70. It's trading at 75. The high for the year is 77. But when you look at this as to bringing it back, this is pretty amazing. So $3.98, and I believe that's when Oprah Winfrey got involved, man. You know, she's done fine, but this is pretty amazing. Yeah, so she owns 5.4 million shares still. She's the third largest owner. Fidelity owns 8.1 million shares, and then you have Artel Group in Luxembourg, which is the main owner. They own 44% of the stock. Pretty amazing. That is one amazing run. So let's see what the good old Weight Watchers has to say here. Okay, so, wow, look at this gross margin. They're selling food and they get a gross margin like this. This is pretty crazy. So their gross margin is 54.1%. It almost sounds like a software company. My God. Their operating income is up 105%, 62 million. They are looking, this is going to be, we're talking 2000 and, Weight Watchers International announced results driven by the global response to the new Weight Watchers Freestyle program. We ended the quarter with 4.6 million subscribers, the highest level in the history of Weight Watchers, and an increase of 1 million compared to a year ago. 1 million, my God. But I can see if this, okay, so it's called the Weight Watchers Freestyle program. Okay, average retention is now 9 months. The first quarter, we delivered impressive revenue growth and continued margin expansion. So here goes the 3 months. So last year and this quarter, they did 261 million. This year, they did 328. Revenue, that's service revenue. That's service revenue. Interesting. Net revenue was up almost 80 million. That was up 80 million. 329 last year, 408 this year. Operating income, they doubled. That's pretty amazing. Net income is up fourfold, folks. Fourfold. My God. Okay, so then they get into this, how they break this out. They break it out as paid weeks. and then online paid weeks. So the online paid weeks are going up astronomically. Online paid weeks went from 25 weeks to 34 weeks. Online subscribers, yeah, big number, 2.1 million to 2.9 million. Big, big numbers, huge numbers. I'm really curious as to the aspect about how the deal works with service revenue. If you get a newsletter that they're actually charging you for versus the food, because at a 51% gross margin, that is definitely not food company gross margins. We take a look at Skyworks. Skyworks closed at $92.25. This is a wireless semiconductor company. This is trading at $92.40. The low for the year is 86. The high is 117. So let's see what this baby is saying. This is right in Woburn, Mass. Okay, so revenue estimate was $910 million. They made $913. Earnings per share, $160. They made $164. Bottom line, this stock is down from highs of $115, and it looks like this consolidation's been on a long period of time. So the top of this consolidation is out here at the 115 level. They hit there first in 2015, hit there again in 2017, hit there again, and tested at 2018. Now, this is a classic, too. If you want to see how tests get done and they can't hold price. So your first high was generated in 2015, had 70 million. You go down, and we hit lows at 107 million. It takes a couple of years to go back to the top. You do it with 51 million. So 51 million at the 70. You test again with 40. So we tested in 2018 with 40 million. That was testing the high from November of 27 that had 51. That was testing the high of June of 2015 with 70. You can see the correlation. The correlation, folks, is that markets, as is life, is all about energy. You know, how is the energy going? Where is the energy going? And what's cool about consolidations, highs or lows, is that you should be gauging the energy each and every time it tries to bust higher or bust lower. Because the bottom line is it's only about how many buyers do you have versus how many sellers do you have. If there's more buyers than there is stock, guess what? Stock's going up. If there's more sellers and less buyers, guess what? Bottom line, it's going down. There's a lot of different reasons that stocks get bought and sold. When you cut to the chase, however, it's all about supply versus demand. What is the supply that you have? What is the demand you have? And what is the price you have? You know, you hear folks always talk about the aspect of, okay, what's the earnings per share? What is the market willing to pay for earnings per share? And that fluctuates. It fluctuates from, you know, they'll pay, you know, $13, $14 for $1, all the way up to, I'm doing an average now, all the way up to 18 for $1. Now we're talking tech. When you start talking tech stocks that don't make money, bottom line is that they'll pay up for that if they think the growth aspect is enough. And then, of course, what ends up happening is that if we go take a look like at Amazon, what you're going to see with an Amazon is that when you do a PE on Amazon, what you're going to be looking for is that you're going to be looking for the aspect to say, okay, the PE on Amazon right now is you're paying, in 12/18, you're paying $132 for $1 of earnings. Well, when you're looking at that, then what you have to do is that you have to turn around and say, okay, I understand that, then tell me how you are growing. Because you're going to put the growth aspect inside of that. And of course, in Amazon's case, they are growing at but 20, well, the web services are growing at 55%. In North America, they're growing 27%. Internationally, they're growing 17%. So you can see those numbers. Those numbers are just absolutely monster numbers right across the world in a huge way. If you did see Amazon, this is pretty cool, actually. This is going to get intriguing. This is where this totally makes sense, too. So check this out. The Amazon In Seattle, they have a bill that's going through that they're going to start because the Amazon got so big, and they're not the only ones. So here it is right now. As soon as we come back, we're going to talk about this because this is why and how a lot of these companies are going to be moving out of their major cities because they've got so big. They'll move into new cities. Bottom line, as people turn around and start taxing even some of these larger companies, they're going to have to worry a little that they start pulling those major jobs out of here. Guess what? Will be one after the other.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So we're talking to Amazon, and so this story started. Well, I'm sure if we were in Seattle, we would have heard the story a long time before this. Anyway, Seattle is looking to basically put in a tax, and that tax is going to be per basically employee. So here, let's go through this because it's pretty wild. Amazon's playing hardball with its hometown of Seattle as the city council nears a vote on a new tax targeting large employees to address homelessness and housing affordability. Amazon, the dominant employer in the city, is pausing construction on planning a new office tower in Seattle and is considering subleasing office space that it already leased to another downtown corporate high-rise under construction. The two projects would house an additional 7,000 employees. Amazon is facing public reckoning over how much responsibility the company bears for the city's congestion and soaring housing costs. This is a hometown employer that Seattle basically is all over. Amazon has catalyzed much of the growth, but it has accelerated the problems with pre-existing conditions. Okay, so well, here, let's go through it first. The company has been hedging its bets, spreading its workforce around, most visibly in search of a second headquarters, which has 20 cities vying for the new complex. This week it was also announced an expansion in Boston and Vancouver. It's called throwing its weight around. That's what a professor said. Amazon has been building out a network of owned and leased office towers as its workforce has expanded to 40,000 employees. As recently as last month, Amazon seemed to be expanding in its hometown. The new structure, known as Block 18, is adjacent to a new office complex. The Seattle City Council has been debating a new worker per head tax on large employees to fund homeless service and affordable housing. The tax would raise $75 million a year. The business community has opposed the new taxation, saying it will impede job creation. Seattle has been rapidly growing city revenues, record low unemployment, and double the national average in wage growth. A task force that the City Council convened to come up with the head tax proposal clearly had Amazon on its sights. The group's report last month didn't mention a company by name, but noted that using net income or profit as a way to gauge whether a company has the ability to pay would probably fall short, since a rapidly growing business may choose to reinvest large amounts of revenue. This is one bottom line. So what you have here, right? So, and I've seen this, you know, when economies are going great, folks, the bottom line is that it seems like right before you get a crash, politicians in general, they'll tax anything and everything like as fast as they can. In Amazon's case, as you know, so Amazon is in Seattle, Microsoft is in Richmond, I think. Yeah, Redmond. So what they're not saying in here, right, is the amount of money that Amazon and Microsoft has put into their school systems, has put into their neighborhoods. It is astronomical, folks. It's why that the jobs out there pay so much money. And the amazing part is what these politicians don't get is, guess what? Amazon's going to move to the next city, because it totally makes sense also. The reason I think it makes so much sense, you know, Amazon is not even like a Microsoft. So what happens with a Microsoft has small offices around all the major hubs. There's no doubt about it. I mean, right up, you know, Boston, Waltham, they got plenty of offices in every major city. The difference with Amazon is that the aspect, they got so big so quick that it totally makes sense as common sense. Well, let's be large on the East Coast, let's be large in the middle of the country, and you start laying it out like that, their probability goes much higher that the competition will be more intense. Also, then what ends up happening on top of that, it's one of those deals that you have it made, you think you can keep squeezing the orange and the apple, and guess what? The apple doesn't want to be squeezed anymore, and they say, okay, you know what? We're going to go lease this to another company, because there's plenty of other companies. So the two buildings that they're looking at right now, the one they actually have, they're basically, that article was saying that they're playing hardball. I suspect, guess what? It's not even hardball. It's like, hey, see you later, man. You're going to do $500 a head. I'm going to go to another city. The other city is going to give me a tax break to come in to build up the workforce, to push out higher wages, to push out higher jobs, to put money into the schools. None of the, you know, depending on which state you're in, some states put money into schools, most of them don't. Bottom line, that's what you need. That's what these tech companies have done, and they've done for a long time. I mean, that's why when you look at the whole Boston corridor, I remember when they actually made Kendall Square in Boston. This is going back to 1982 now. When they made Kendall Square was nothing. It was basically, they made it for a biotech hub. Bottom line, it worked. Why did it work? Because as those biotech companies came in, they were large, well, they were large and small companies. But what did happen is that they were pushing money into those communities, into those schools simultaneously for good education. And guess what? You get the education, you're going to get the jobs, you get the jobs, you're going to get the bread, you get the bread, you're going to do the business. That's the cycle. And in this day and age, technology-wise, it's really the cycle, because what ends up happening, there's so much technology that has taken over manufacturing jobs. You know, bottom line is that hey, listen, you know what the cool thing is? If you don't want to go to college, still plumbing, woodworking, there's still some great jobs out there. You're going to work, but bottom line is that there's skills out there, if you're not going to go to college, that you can do very well, but you better get a skill. That's the bottom line. Some of the higher volume stocks out here, as we come into the close out here today, Snap. Yeah, Snap got cracked. This baby was down yesterday. Let's go see what it ended up closing out at today. So that came out with numbers yesterday. $10.97. Broke the lows of yesterday. I think this is an all-time low. Yeah, it is. So this had a high volume low of $11.28 here. Now you're at $10.97. This baby here, this went public at 17. So, and that equity there was a one-way trade. General Electric still in big trouble. GE, folks, this is going to be a textbook case, more than likely, for Harvard and MIT, just how GE fell apart. You had Intel up 3 cents. That's no big deal there. We had Facebook down $2. Let's go see what Facebook's doing. So Facebook right now is at 174. Yeah, that bounced off the lows. That's still basically in trouble. You know, Comcast down 29 cents. Yeah, NXP was the big one. Bank of America. You know, Bank of America, this was, I started the program today, you know, with the financials. Bank of America, you talk about breaking swing points with volume. Your high volume low was $29.15. We hit $28.43 out here today, and you get juice behind the move. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So let's go over and take a look at Overstock right now. Overstock closed at $38. One of the Tigers tell me it's moving out here. Well, it's at $39. Maybe it moved. Yeah, I don't see it moving. Yeah, this is down from a high of $80. Oh man, look at that thing. That's all about Bitcoin. $14. This is $14 in August, up to 89, back to 38. See ya, don't want to be ya. Okay, so what do we have out here? You're building cars for lower price. You have the SPY, February 9th time frame, folks, is the thing that want to keep your eye on. The couple of defense contractors have already broken that level, broken it with volume. That's a problem. That's saying you're going to go lower. You had the financials come down to it today. That's amazing, actually, because we know that the spread has been going up, the interest rates have been going up, so that absolutely makes no sense. When you take the aspect of the numbers that the companies have been coming out with, they've been great numbers. And I'm talking about a lot of companies. They sell, they sell, they sell. We're in a selling season here. That's what's going on. Jobs numbers coming out tomorrow. The way the market's trading out here, I expect you're going to see a sideways market. You're going to get basically pushing back and forth. And the reason I'm saying that is that, see, when you look at this week we really just had a sideways market. You know, if we start off the week, you started off the week, we had basically started off with the SPY number at 266. You're at 262. It's really a sideways. This is the building cause for lower price. The reason that I'm saying for lower price, when you come into swing points, you have an expansion of volume. That is more consistency. And right now, it's very consistent that each and every time we get down, you have the expansion of volume on the way down. Each and every time the market tries to get higher, you don't have any volume whatsoever. There's no buyers. When we take a look at the S&P, you're going to see that you have 4 lower highs now since the high that was generated out here on the 26th of January. Stay right there, folks. We got our man, Mr. Andy Heck, coming up, growling and prowling with you. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize that, step into it, take ownership of it, and fly with it. Everything you need is right inside you. Go have a blast with it. Look forward to speaking right back here, 8 o'clock tomorrow morning. Look at them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.